Hello traders, Yolanda here with extraordinarytrading.com. Now in this video, I am going to share with you the trade signal results for the month of January of 2016. So I know a few people have been asking who have been kind of observing or on the fence or whatever as to whether or not they wanted to join the trade signal service. Now before I get started with our actual results, there's a few things that I do want to share with you. Number one, I did not include any canceled or break-even trades in on this list. Okay, so in this log, if the trade signal was sent out and then I later canceled the trade, prior to the trade entry actually being triggered, then I did not include it. Or if we got into the trade and it didn't seem like things were going to work out, but price ended up pulling back to about break even and we exited, I did not include those trades either. The other thing to make note of is that every 6 to 8 weeks, we typically have a losing week, okay? And so we had that 6 to 8 week time period this January. So what I did is I deliberately just scaled back on sending out trade signals. I would prefer for us to take fewer trades and hold on onto our capital than for us to take a big hit on our capital. So that occurred during the month of January, impacting premium members primarily. The other thing that I wanted to make note of is that for my trade signal members, one thing that I encourage them to do is to keep their risk to 1 to 2% per trade. Okay, 1 to 2% at a max. And so what you're going to see in this log is that I'm not talking about pips at all. The reason being is that pips really don't matter. We really can't take pips to the bank. Okay, what really matters and what will really determine your ability to hold on to your capital is really risk management. Okay, so what you're going to see from me in 2016 is more of a focus on percentages. So what percentage of the account was grown or lost, things of that nature. That's far more important than worrying about pips, okay? Then the other thing to make note of is that the day trading signals log on the right, that was a new service that I launched in towards the middle of January, okay? So we do not have a full month's worth of data. So we went through the first few days before people started joining. So really the timeline that you see is people started joining like around the middle of the month is basically what happened there. Okay, so let me get started. And again, I want to reiterate, in order to get the results that I am going to show, it is imperative that members manage their risk, okay? Again, 1 to 2% per trade. Here's why that is so important, especially for premium members. So say, for example, day one, we close out a trade with a 50 pip profit. Day two, there's another trade with a 20 pip profit. Day three, we have a trade and it's a 100 pip loss. Well, if you're the type of person who is always trading the same position size, regardless as to what symbol it is that you're trading or what the stop loss is, you're going to get some very interesting results, okay? One of the things that I communicated not too long ago is that I want members of my trade signal services to really think big picture, because really, if people get good at managing their risk, they could literally take a $2,000 account and in a few years be a millionaire, okay? So I'm going to quickly walk you guys through what our results are. I will post these logs to my website and I will provide a link to that because I don't want this video to get too long, but I know some people were asking, so I'm going to show you guys the results. Okay, so first up is going to be the premium trade signal service. So again, assuming a 1 to 2% risk per trade. Now what I did is that if for some reason, if you see that the loss is less than 1%, what that means is that we had an early exit. So that means that either the trade did not hit its stop loss if it was a loser, or it did not hit its profit target if it was a winner. Okay, so that's why some will be less than 1%. And these are averages. Okay, so on average, I try to go for at least a 1-to-1 risk to reward. Sometimes it's more, sometimes it's a little less, but we're managing to the risk here is essentially what we're doing. And if for some reason there's an inverse risk to reward ratio and it happens to be a loss, that's reflected in this log here too. So for those who were risking 1% per trade, they would have walked away at the end of the month with about a 10.5% profit, which is awesome, guys. I mean, I told you guys before, do the math on what double-digit profits each month will get you in the long term, okay? For those who are risking 2% per trade, they would have walked away with almost 21%, okay? And then for my new day trading signal service, for those risking 1%, they would have gotten a little over a 2% profit. And then for those risking 2% per trade, they would have gotten about a 3.5% profit. That's still really good. I know many newer traders probably think, well, that's not that much. It is. It is. Take a look at the stats of what the biggest hedge fund managers do in terms of their performance. I think Carl Icahn is currently ranking #1, and he has what, like a 30 or 35% annual return. It's huge. It adds up. And I really encourage people to sit down and do a little math. Understand the compound effect of these steady gains, okay? So again, guys, I am going to keep this video short. I will link to these logs on my website. And if you have any questions, feel free to leave them in the comments section below or send me an email over at info@extraordinarytrading.com. And as always, happy trading.